Hey everyone, welcome back. Today, let's discuss the ETFs from the international market and the emerging markets. Here we see a nice handy dandy world map for those of you that have never seen a map before and know that there's actually other countries out there other than the United States. We're going to go through a few ETFs from the emerging and international markets and see how well they've done, and they're expected to do well again. These have beat the S&P and the other indexes from the US by nearly double. So this could be a really good opportunity to make a lot of money, to have your good investments accounts diversified, and to offset risk for the United States market, especially with the globalization and all the news that's been going on and the new AI competition and all of that fun jazz. So let's get into it. Bum, bum, bum. All right, so we see here, we're looking at SBEM, the emerging markets for Spider. We see here that the 1 year is 27%. And the year to date is 5%, and then let's do the 1 month, is at 5% almost. So already in January, we're not even finished with January, and we're up 5%. That's better than almost probably pretty much any index you're going to be in that's a global index like VTI or VOO, things like those from the US markets. So again, the 1 year is 27% in SPEM. I want to show you what they're invested in. They're doing Taiwan Semiconductor at 10%. I have done on this channel before the Taiwan Semiconductor. Elon Musk just said a few days ago, I think even today or yesterday, that there's going to be more robots than people. And that's true. And now it's not, again, not the beep boop bebop robots. This is the robots that are going to be building, manufacturing, going to help with construction, going to help with deliveries, drones, all that stuff. Even fighters. There's probably going to be fighters for war with robots doing all that stuff. And that's 10%. And if you look at SMH, which heavily invests in Taiwan Semiconductor, 50% on the year. So doing very well. And you see some other international holdings here. We see China. And then now I want to show you a developed market index, VEA. Now this one we look at the 1 year and it did 32%. Again, more than double what the S&P did. So you see what markets they're going to be in. We see Samsung, Nestle, and a few other companies. Royal Bank of Canada. So we see here several different countries. Financial services, industrials, technology, healthcare, broad mix. So this is like a safe play in this sense of diversification throughout industry. You're not heavily invested in just technology like you would be in QQQ or in another fund that heavily invests in technology. So again, a emerging market or international market is a really good pair with some US stuff like QQQ, VTI. There's going to be almost zero overlap. And we'll do an overlap comparison. So now we see here another emerging markets fund. Again, we see 28%. We're going to see some very similar markets that they're in. We see Alibaba and we see Taiwan Semiconductor and this corporation, which were in the SPEM. And again, we see technology, financial services, and communication services and consumer. So again, been doing really well. The 1 month is up 5.8, almost 6%. Next, I want to show you specific countries. These have done absolutely crazy. So if you're on the in, and you're new to invest in Vietnam market, and if you could have, which I'm sure you could because it's a US, you could have done 72% return in 1 year. That's absolutely crazy. And I want to show you this stock ticker because I believe it's just off the screen for you all. So we see here the Van Eyck Vietnam ETF. We see just invest in some Vietnam companies, and we see real estate, financial service, industrials. And the 1 year was at 72%, and the 1 month we're looking at almost 7%. So again, probably gonna have a really good year, given the globalization, the markets ever changing throughout the globe. Now we see 53% from Mexico. Again, going to be Mexico companies, and about the same diversification from the sector. I just want to share 2 articles with you. We see here that there's a ton of diversification away from the U.S. risk assets in both equities and fixed income after Liberation Day, and this is just for people to avoid the volatility if they're afraid of the markets and to get global exposure. Really good. We see 134 billion in this emerging markets and almost 6 billion this month alone, which is why we see January here a really good year. So we see January, and we see that there's been really good Asian soaring markets, which explains the Vietnam, how it did absolutely amazing. So take a look at this article. It's from a financial advisor. Next, we see here again that the iShares Japan is going to be recommended to look out on by the Yahoo Finance. And Korea gained 104% over the past year, driven by Samsung. So that's absolutely incredible gains. And then the iShares Japan rose 31%. So 31% is not as good as the Mexico or the Vietnam one, but South Korea 104% gains. That's absolutely crazy. You made more than you put in by 4%. So really good. And let's get rid of that. So take a look at international funds. And now I want to show you a ETF overlap comparison. Let's take a look at an ETF overlap. Let me do, for example, VTI, which is like a total stock index, with VWO. We see there's no overlap at all, and we see the companies are completely different. Next, we'll do VEA. We see again no overlap, completely different markets. And then we'll do VTI with SPEM, and again no overlap. So let's go back to the home screen, and you all can enjoy the picture of the map. We see that international and emerging markets have been doing amazing. We just saw that 104%, 50%, 70%, 30%, 28%, beating the markets. Put in 5 to 10% possibly into one of those. Not financial advice, obviously, just a recommendation. And I will show you all next time we look at international markets, how they did in comparison with the U.S. markets after the first quarter. So hope you're all doing well. Let me know if you're invested in international markets and emerging markets and how you did.